So, good morning, everyone. I'm Jen Blandos. I am an entrepreneurship and capacity building consultant and advisor with UN Women. And I am going to be your host for today. And we have with us Carol Glynn from Conscious Finance Coaching, who is probably one of the experts in the UAE, especially on supporting women and also women in business with finance. And so when we had a session on understanding profit and loss, I reached out to Carol because I really wanted to have Carol run this session and to be able to share her knowledge with women, because this is a bit more complicated than just doing your finances and using an online accounting system. And I wanted to go a bit deeper into some of these areas. And over the next year, as part of the UN Women program, we will be delving a little bit deeper into some of the more complex areas of finance related to our businesses. So if we can just go to the next slide before we kick things off today. Oh, there's me, there's Carol, there we go. Next slide again. I'm going to let Carol introduce herself to you as well. Carol, you don't have the right PowerPoint presentation. I'm just saying this, that it's the wrong one. If everybody can just give us one technical second while Carol does that. What I'm going to do while Carol is doing that, I'm just going to whiz through some of the housekeeping things that I want to share with you. The first thing is, I don't know if all of you have heard about the Women-Owned Business Directory that UN Women is putting together in the UAE. If you are a majority woman-owned business, now what that means is if you are a full owner or if you own more than 51% of your business as a woman and it's owned and run by a woman, UN Women is putting together a list that they are going to be sharing with the procurement departments of a number of government entities and large organizations who are really committed to working with and hiring yep, that's the right presentation. To working with and hiring women-owned businesses. So Maya is just going to pop into the chat box the link for you to enter your details. So if you haven't done so, please could you do so, because that's really important that we're able to capture your details, and we're going to be able to help you potentially make those connections with other organizations who want to do business with women-owned entities. As always, when we do these sessions, we love it if you take screen grabs, if you take pictures, if you're either on Twitter, Instagram, LinkedIn. It would be great if you want to go and share this information. And here are some of the tags of not only NAMA and UN Women, but also as well with Carol and myself as well, if you want to tag us. So if we can just skip a couple more slides, Carol. What we would like to do before I introduce Carol and we start off the session today, we would like to do just a bit of benchmarking to understand where you are at the moment in your business. There's going to be a poll that's going to come up in a second. And if you could just fill out the poll for us and let us know what where you are when it comes to understanding P&Ls. If you have no knowledge, if you've got good, just let us know where you're at with that. I see that we're missing the good option. I'm sorry about that. So we're missing one option, but if you could just fill that in. While you're filling that in, Carol, do you want to maybe kick things off and introduce yourself? And then we'll finish off this poll.
Okay. Thank you. And thank you for having me here to talk about this really important topic. But yeah, just before we start, who am I? I am Carol Glynn. I am a chartered accountant by trade. I had spent 19 years in corporate, so my bread and butter was finance within corporate, big four firms, large multinationals, up to the level of head of finance or regional CFO here in the UAE. I've been here for 12 years, but I've worked mainly in Ireland, here, and then sometimes in the US, Singapore, and then various regions across the world, really. But 2 years ago, I set up my business, Conscious Finance Coaching, and its purpose is to help women be more confident, feel empowered, educated, and really just help women with money and finance. And I do that from a business perspective, which is where today comes in, but I also help women in their personal finance, so budgeting. But overall, my passion is just to take away that overwhelm that women tend to have when it comes to money. So I do coaching and workshops like this and educating, and I'm very passionate about it. So please do ask any question at all throughout today, and I'll do my best to help and answer.
Now, before we kick into the content as well, I just wanted to say, because we do have a large group, and I'm sure you're going to have lots of questions. If you do have any questions, if you could pop them into the chat box, I'm going to help Carol as we go through the session, and I'll interrupt Carol at appropriate times to try and get your question answered. So please just put it in the chat box. I'll be pulling them together. There might be some questions that are going to be similar, so I'll group those as well. If I can ask you please to not unmute your microphone and interrupt Carol, because that can be a little bit disrupting. The other thing as well is these sessions are non-promotional. And so what that means is that we're not here to pitch our businesses or promote our services. So if I can please ask you as well not to be trying to pitch your services within the chat box, because if that happens, one of the moderators will remove you from the session, okay? So let's keep this really positive, that we're sharing our knowledge and experience, and we have a great session. So Carol, over to you.
Okay, so I shall end poll. Share results.
It's the poll, so you can just kick things off now.
Okay. So we already talked about who I am. So we have one more poll, sorry, to kick start as well. So do you know the purpose of the profit and loss statement? Is it yes, no, and or I would need to ask my accountant?
That's really great, Carol. I'm just saying the answers come through that a lot of people do know the purpose of the P&L statement. So it looks like probably what we'll need to be doing is just delving into a little bit more detail to explain it. So that's great.
That's great. Yeah, that's really helpful. And I guess the reason I would need to ask my accountant, it might sound like it's a bit jokey, but actually I find a lot of women, especially more so than men in my experience, will hire an accountant and then just hand over to them. So they outsource the finances and then don't use any of the information. So very often I get that answer, I have finances, but I have no idea what to do with them. So, okay, so we will, that's great though. It seems the vast majority know the purpose of the P&L. So what is it? So your profit and loss statement, your P&L, it goes by many names, and this often causes confusion in many areas of finance. It's also known as an income statement, a statement of operations, statement of financial results, earnings statement, statement of comprehensive income. They're all essentially the same thing. They can have different formats, but they're all doing the same thing. And what is that? It is summarizing your revenues and your expenses over a certain period of time. And that can be many different periods of time. So it can be this month, it can be this quarter, it can be this year, and the comparatives can be this month to last month, this month to the same month last year. So it really varies. And if you have, depending on what information you want to, or what purpose you have for reviewing it. So if you have a good accounting system, it should run that for you very, very quickly and easily. And it's really, really important to compare your income statement. And really what it does is it tells you how much profit you have made from the sales you've made. And I'll make this point quite a lot through the presentation. It's about profit from the sales you've made, but it's not cash in bank. So we need to make a clear distinction that your income statement tells you what you have sold, what income your customers have committed to provide to you, what you have spent in your business or what you have committed to spend. One minus the other gives you your profit, but that will not necessarily equate to what cash you have in the bank. So what are the components of an income statement? So these are the main ones. Revenue, again, can have many different names. Revenue, income, sales, services, sometimes that's called, if you have a service, focused business. Then the next step in your income statement will be your cost of sales. And we'll go through these in detail, but at a high level, your cost of sales is anything that is directly related to the product that you've just sold or the service you've just delivered. All of those costs directly related to that activity that drove the income. Then you take away the cost of that sale from your sale and you get your gross profit. And gross profit is a crucial number, which again, we'll go through in detail. After gross profit is everything else. So that's all of your other costs. So your rent, your utilities, those kind of things. That brings you to your net profit. And then in regions or countries where you have corporation tax, or if you have a loan, a business loan, for example, and you're paying interest on that, very often after net profit, you will see net profit after tax and interest. So this is the main areas that we will focus on today. So first, let's look at income. As we said, it's also known as sales or revenue, and it is the money that a business receives in exchange for producing a product or service. And this is an important point when you're reading your income statement. It shows what is invoiced, it's not cash received. So it shows what, the commitment that you've made to the customer to deliver. But if it's in a store, for example, it will be the sales that came through on that day. But if you are, a buy now, deliver later business, your income will not necessarily match what cash you have received in that day. And it's very important to remember that. And it's also the main focus for most businesses. And this is where a lot of businesses run into trouble, because we very much focus on sales, 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 especially when we're new entrepreneurs. And we think that the more sales we can get, the more successful our business will be. And while there is truth in that, it's not the only number we need to consider. And that is exactly why this workshop is important, to understand what else impacts how profitable your business is. And it can impact your income very much so. So like an example from in my days of corporate, I used to have to work a lot with P&L owners within businesses and sales teams where their only focus would be on sales. And sometimes they may have won multi-million-dollar contracts and being very excited about the amount of zeros effectively, but they didn't put the time in to break down how much it's going to cost. Do we have the resources? And sometimes it actually meant we made little or no profit, sometimes losses on those what looked like a huge contract, but actually, without looking at the expenses and the time involved, it wasn't worth it. So while income is a really, really important number for us to focus on, it's definitely not the only one. So the next number we look at is gross profit. So what is gross profit? It is sales minus your cost of sales is gross profit. And to me, this is one of the most important numbers that we need to look at, because it can drive so many decisions. It only considers the cost to produce and deliver a product or your service. So it is areas like the stock that you bought in and then resold. It is, if you make your own products, it's the manufacturing cost to make that specific product that got sold. And maybe the labor. So if you're delivering a service, the time, the cost of the time of either if it's you or you are doing it or your employee to deliver that service. But also it's important to remember here, it's only the proportion of those costs that are directly related to that sale. So if we take an easy example, if you are a jewelry seller and you bought 10 pieces of jewelry and you sold 8 of them within the period that you're looking at here, you will only see the cost of 8 of those pieces of jewelry. The other 2 pieces of jewelry will sit on your balance sheet as an asset. You will only see the cost of those 2 pieces of jewelry in your income statement, in your cost of sales, once they are sold. So you'll see there's a direct link between what I have sold and the cost of what I have sold. And the reason that's so important is because your gross profit will tell you how much you are earning on your sales, on your investments in your stock, based on when it's sold. And then whatever you have left after that is how much money you have to pay for the rest of your costs within your business. because this is another kind of faltering part in when we start up with new businesses. We first of all focus on income, and then if we don't really go through the financials and go through the cost of our business, we will look at, we almost forget about the peripheral costs, and we look at how much did I pay for that piece of jewelry in this example, and how much did I sell it for? Therefore, the difference is my profit. The difference is your gross profit. But what about the rest? And that's what we'll get on to for net profit. The other important piece for gross profit is we need to look at gross profit percentage or gross profit margin. And that is basically the percentage difference between what you bought for and what you sold for. So while, again, 10,000 dirhams might sound like a lot, but actually, if you look at the gross profit percentage, if it's only 5%, then that means you've got very little actual amount to pay the rest of your costs. And also, the really powerful piece of information for your gross profit percentage is you can benchmark yourself against other similar businesses in your industry. So if you're earning 5% and you do your research and you see that other jewelry sellers similar to your business and your target market and your kind of level are actually earning 25%, then that can tell you your prices are probably too low. Maybe you're targeting the wrong customers, that there are people out there willing to pay more because the industry average is 25%. So with that information, you can look to increase your prices with confidence and know that that is actually possible. And the higher that gross profit percentage, the more protected your business is. It's essentially the core amount of profit that you're making that allows you to pay for everything else. And we'll get to what everything else is now. So after your gross profit percentage, then you take away your operating costs, which is effectively everything else. And that gives you your net profit. Sometimes that's called the bottom line, your net income. It's essentially your profit after you have paid for everything it has cost you to run your business. And examples are office salaries, rent, your accountant's costs, stationery, telephone and internet, and marketing. And that's one that a lot of people think would be a direct cost of sales. But unless you can link that marketing campaign to a direct sale, then no, it's general. Because if you think about it, your marketing is very general to gain customers usually. And you can't pinpoint it to a specific sale usually. If you can move it up, absolutely. And then the final outcome, so when you take your gross profit, take away all of these costs, that tells you your profit or loss for the period. And I have seen many businesses who are profitable at a gross profit level, and the number looks quite healthy. But going back to when we look at the actual percentage, it's not quite high enough. And then it turns out that it's not enough to cover all of these costs. And these costs are often quite fixed. So rent is usually an agreement for at least 1 year, maybe more. Accountants' costs, they don't tend to fluctuate. It's an amount every month. Your office staff salaries don't change. So it can be very difficult to reduce some of these costs. So that's why it's very important to make sure that you increase your income enough so that your gross profit will cover these costs and leave you some profit afterwards. And this is why it's important to look at the whole picture, not just the top line and not just gross profit. And then knowing what your operational costs are is really powerful information as well, because essentially these are non-profit generating costs. They're usually things that we call sunk costs. So you have to pay them regardless of whether your business is generating any income. At least with your direct cost of sales, very often, if you don't have any sales, you can reduce your cost of sales. You don't buy new stock. You don't have to pay for transportation. So there's a little bit more flexibility. If your sales aren't there, the costs are not always needed. However, between your gross profit and net profit, these administration costs, operating costs, very often you have a commitment. Your telephone bill, your internet bill, it's very hard to reduce them. So it's really important when you are setting up your business that you are very mindful of these costs. And again, building it all up together, can you generate enough income to pay for all of it? So speaking on costs, so as we said, expenses, they're divided into two categories when it comes to your income statement. The cost of sales, and it's sometimes referred to as cost of goods sold or cost of services delivered. And it is the cost to produce and sell your product or service. And then your operating costs are everything else. And I'm kind of laboring on this point a bit because I think it's really, really important for your business to really distinguish between them, because one can be very flexible and one can be very inflexible. So when you're making decisions on how to utilize your money and where you're going to invest your money, you need to bear that in mind. One is a long-term commitment. The other one you can manage maybe when sales are down, or when sales are up, you know that it's going to increase so that you will need more cash. So now we can talk about what a P&L tells you versus what a P&L does not tell you. And I think that when you start looking at a set of financial statements for the first time, you'll see that, and you may work with your accountant or your business partner on this, and usually the statements that are looked at first are the income statement, the balance sheet, and the cash flow. And I find actually the cash flow is the one that's left most often, but it's actually really powerful, and it's very much linked to the P&L. And this is where I want to make sure that we understand which pieces of information we take from each statement. But for specifically on the P&L, it tells you how much profit or loss your business has made during a certain period of time. So you need to be, when you're running these reports, be very aware, is this for 1 month, 3 months, 1 quarter, 6 months, for a year? And what is my comparison? So my 12 months for 2020 versus my 12 months for 2019, my month compared to last month. So it's a very specific period of time. And we'll get to why that's important information, but it's mainly because we know many of our businesses are cyclical and they have different periods. And this is exactly the next point. So it's an insight into your sales cycles and patterns. And that's a really, really important piece of information. If you can map out your income statement and you can see patterns. So very often in the Middle East, we hear how the summer for many businesses tends to be quieter. A lot of people travel. So many businesses will see, maybe 9 months of their year, they've got pretty solid income, revenues, customers coming through. And then for 3 months, every year they see that dip. And when you look at your income statement and you can see that, you can then plan for that. And you can plan for that in many ways. So it could be, when do I focus my marketing budget? So 2 months before the peak, every year, my best sales are in December. We will start really ramping up and investing in our marketing 2 months before, so that we can make the best use of that peak time when our customers are most interested and most active. And then the flip side of that is, if we are generally quite quiet during the summer, marketing budget would probably be wasted because the customers just aren't available. Let's park that, spend that money somewhere else. Or it could even be useful for annual leave planning. So you can have a conversation with your employees as to what's the best time from a business perspective and from their perspective to take annual leave. The quieter months are these months, therefore it's easier if we take leave this time, or for yourself to travel. So it can really tell you how you can manage your business to best utilize your sales based on when your customers in the past and have been most active. How much are you spending in your business? And this is one when I work with new entrepreneurs as well, where when they don't track exactly what they're spending, I often hear, well, I know it's this and this, but I don't understand, I can't really quite tell why I'm not making as much profit. Because we don't run spreadsheets in our heads. Many of us are good at maths, and it actually doesn't matter if you're good at maths for this at all. This is just about reading the information. And you don't need to be good at maths to see exactly the total number of how much you're spending in your business. And usually that's, what are my administration costs? What are my sunk costs, my day-to-day costs that I have to pay regardless of whether I have sales or don't have sales? And how do I make sure I always cover them? Unless you record them and write them down and review them, it's very difficult to know. And then it can, that in itself, it can be very, I've seen clients really powerful, like aha moments going, it didn't sound like quite a lot, but actually when I add these 3 or 4 expenses together, I now can see the impact that's having on my business. And either I need to adjust those costs, or I need to really work at more sales, increasing my profit margin, so increasing my prices. But that's useful information for them to make that decision so that they're not continuing on towards losses. And to the linked point, and if your sales are enough to cover all of your expenses, because as I mentioned earlier, we very often just focus on, if it's not only on income, then it's gross profit, and the rest of them are too periphery. They're not, we don't focus. So this tells us, actually, is my top line turning into a positive bottom line? Is my income turning into a profit? And the income statement is how you will know that for sure. What it does not tell you is how much cash you have received from your sales. So the difference is income, like I said, is what your customer has committed to purchase off you, for you to deliver in a service to them. It's what you've actually invoiced out. But as we know, in a lot of businesses, invoiced out, we may not receive that cash for 30 days, 60 days, sometimes 120 days. So that very much depends on the nature of your business as well. Obviously, if you have a retail store and it's pay on sale, then yes, you are unlikely to have much of a difference between your income and your cash. But for the vast majority of businesses, when we set up, it is a case of there is a delay between when we get paid and how much income we have. So it's very important to bear that in mind, because you need to know if your business has enough cash to succeed. And this is actually one of the biggest causes of failure for new businesses, is that they don't monitor their cash. They don't monitor how much is in the bank. So if we look at purely income and don't focus on when we get paid and chasing up on receivables and chasing up on customers, or even just planning, because very often the customer has ordered something, you may then need to use your cash to invest in the stock or the manufacturing or the service team to deliver that. And then there's a time difference between when you deliver it and when you get paid. And do you have cash to do that? And that's where your cash flow and your balance sheet come in, not your income statement. Again, it won't tell you who owes your money, but on the other side, your creditors. So we put through our expenses, but we may not have necessarily paid them out yet. So you need to be mindful that you still might need to make sure you have the cash available to pay your creditors. And it's an historical information. It's telling us what's happened in the past. So it does not guarantee future profits or losses. But we'll talk about how we use this information to help us generate and protect our future profits or losses. So how to maximize your profits or minimize your losses. Identify your income patterns. So I touched on this earlier. If you have a business that does go through cycles, then it's really important to plan your business around those cycles. And that could be many things. So if you can see in the past 2 years, your business spiked in December, but you had really slow June and July, then you would probably, like I mentioned, really work towards maximizing that potential in the run up to December, and then manage your costs for June or July. Or how do I diversify and make sure that I've got other products, other services, or find other markets which don't go quiet in the summer, where then I can balance out my income and look to June and July as to where I can increase my income there, so I'm not going through these cycles. Every business is different, but it's giving you that information to know when I'm getting my income, when it goes down, what has been the pattern over years, and you can plan so much around that. Profit per product or service type is a really interesting one as well, because this is, I'll give an example of an exercise I did with a client, which was really powerful for her at the time, and I think it really shows how important this is. So in the UAE, we've many service providers, and very often we have five or six different services within that business. And this example was where this lady was focusing all of her time and energy on what was her highest revenue generating service. So the one that when we listed them out was actually bringing in the most cash. However, when we broke it down and did essentially an income statement for each service and we got it to gross profit level, we could quickly see that the cost of running that highest income generating service, but it was very expensive for her to deliver that service. She had to hire a lot of things. And actually, it also cost her a massive amount of time. So when we broke it down to gross profit, it wasn't the one generating the most gross profit. Actually, the service that she enjoyed the most herself, had most interest and passion for, was per customer generating more gross profit. So out of that exercise, she decided to focus more time on that service that she enjoyed, that was giving her more gross profit per customer, was less time consuming, and she focused more time on that and could balance out and do less time on the one that she didn't enjoy. It was time consuming and it was quite expensive. And actually she increased her profits overall. That is information she never would have known without doing that assessment of income to gross profit. And therefore she had powerful information so that she could drive her business in a better way. She had more time and she had more profit, and she actually enjoyed the services more. So it was a win-win all around. And the flip side of that is sometimes our most revenue generating, or even, average ones we think are plodding along in the background, are just not making a profit. They could be loss making, and they're just not enough for the effort that we put into it. So that's why it's really important to really look at it per product or service type, depending on your business. As I mentioned earlier, your gross profit percentage, and this is really important. And again, it's your total gross profit divided by sales. And that's a good way to be able to benchmark your business in the market, so that you can really, to be honest, the biggest piece of information here, I think, will be to know, is your income high enough? Are you charging the right prices? And it can give you that confidence boost that, if you feel like you want to charge more and you see that the industry in general is charging more, then you could do that. The other side of it is maybe you're paying too much for your inputs. Maybe your stock purchases are too high and you need to go back to your supplier and negotiate, because you can see what other people are charging and you think your prices are quite similar, therefore they must be getting their stock or their inputs at a lower price to you. So it's telling you that you need to look at that so that you can maximize your gross profit percentage. And then it allows you to manage wisely your expenses. And I say less is not always more here, because I think very often businesses, when they feel like their income's not enough, we immediately cut costs. And while obviously there's a cash conversation to be had there, but sometimes it's about we need to invest more to make more. And it's going back to that example of the marketing. So very often I see that marketing can be one of the first areas that people cut, usually because it's quite flexible. Our rent can be difficult. Our telephone tends to be a 2-year contract. We don't want to let our teams go, salaries, we want to keep our employees. And I often see that marketing tends to be one that, and I think you need to be very careful when it comes to that. And look back to, actually, is there areas in my expenses that if I invest more will drive more income? Like the example I gave, if I invest more in marketing, maybe in October, November, in the run up to December, if that's a peak time for you, then actually I will drive more income. And that's an investment. Mind is it's an investment rather than an expense. But then the flip side of it is, if you're saying that, where my warehouse is, it's just not sustainable, it's too expensive, therefore I need to negotiate with my landlord, or I need to find somewhere that is more affordable for me, given my business model. It gives you the information to do that, and therefore you're reducing your losses or ideally boosting your profits. And the first place really to look are these administration costs, because they tend to be quite large, long-term commitment. And we do tend to sometimes overlook them because we feel they're a given, there's nothing I can do. But it's really important to look at them all together and see the impact it's having on your profit. And also review this statement in conjunction with the cash flow statement. So, for example, your income for 1 year is 500,000 dirhams, but actually your cash intake was 250,000 dirhams. What is going on there? Who is not paying you? When are your customers paying you? And when can you, or how can you change that? Do you need to invest more in your receivables team that they're chasing people up? Do you need to change your contracts? It's really important information to see. My income statement says I should be generating this much profit, but how much cash am I taking in? And combined, you've a lot of information there to help you with your business. So what does a P&L look like? This is a pretty straightforward example, but it's the essence of what it is. You've got your income, and you see in this one, it's a landscaping business. So they've got 3 main service lines or product lines: landscaping services, retail sales, and consultancy. And some businesses will lump them in together, but I do think that the more you can break it down, the better, because like I said earlier, being able to analyze your services as individual as you can is really powerful, especially if you're on the smaller side and cash flow is quite tight. You really need to understand which business is pushing your, which service line or product line is pushing your business forward. So you add those up and you get total income, and you'll see here we're comparing for the year end 2020 to the year end 2019. Our movement, so what's the difference between the two, and the percentage movement between the two. Cost of goods sold, you've got your cost of stock, direct labor costs in this case. So cost of stock will be the plants, the soil. Direct labor costs will be the landscapers who are actually going out to the hotels or their homes to do the work. And then direct transportation costs. So how much it costs to get all of that stock and labor cost to the point that the sales were made. And then you've got your gross profit and loss. And then below that, it's been cut off here, but below that you've got then everything else.
Carol, just before you go into that, I have a quick question that somebody's asked, and they wanted to know, is there a specific gross profit percentage that we shouldn't cross as a limit? Could you maybe speak in a bit more detail about that?
Yeah. So actually, that's a very common question. What should my gross profit percentage be? To me, really, ideally, you wouldn't go below double digits, so less than 10%. But it really, really depends on industry. It really, really depends on the market that you're in. So I would urge people to do the research. So if you're in a jewelry business, a landscaping business, this is, if you're in retail, there's plenty of public information out there. There's plenty of analysis if you research online that will tell you what is a good guideline. I would never recommend going below 10%. And even at that, that's really quite tight. What you need to also look at then is, what are your actual costs? Because if your administration costs, because if you look at, for example, a manufacturing company, and they are creating, let's say, furniture for gardens. So what are the fixed costs going to be for there? The administration costs. You're going to have a warehouse, you're going to have machinery, you're going to have insurance for that. You're going to have a lot of staff building all of those products. You're going to have a sales team and marketing and all of that. So that's a quite administration, operational, heavy type of business. However, I'll use myself as an example. I essentially work by myself. I have people that I collaborate with. I don't have a warehouse. I'm a coach. I don't have a warehouse. I don't have a big office. Therefore, I don't have that heavy fixed cost that I am bearing that I need to make sure my gross profit covers. So for me, in my business, my gross profit can be 10% and be quite healthy. However, if you look at that manufacturing business that's building, like you said, garden furniture, for example, they've got a lot of administration costs to cover. So their gross profit at 10% is highly unlikely to be enough to generate a profit. So this is why we need to look at the full picture. Again, be it based on what your business actually is. So I guess the kind of summary is the more administration and operational costs you carry that are fixed, that you need to pay regardless of your sales, the higher your gross profit percentage needs to be, not even should be, it needs to be able to cover those costs. I hope that answers.
That's great. Thanks very much. There's no other questions really that have come up. So I think we're good to move on.
Okay. So shall we do the exercise in the breakout rooms? So what we've done is we've just put together a pretty straightforward exercise. So a blank P&L, which we will put in the chat, I think, Jen, is it? We'll put the details in the chat, where it's a spreadsheet that you can then basically input this individual's expenses into their income statement, categorizing them between cost of sales and operational costs. And then once that's done, I'd like for within your breakout rooms a discussion on coming up with 3 pieces of useful business information that you can see in that income statement that that business owner could use to make changes in their business.
Carol, I think I'm just going to randomly put maybe 5 people in a group, just because I think there might be some people who are working and listening in the background.
Okay.
If you're not able to take part, that's fine. But what we'll do, it's quite useful to go through an exercise like this. So I'll do 5 people per group. So that will allow you to kind of be in a nice size group to have a bit of a discussion. If for some reason you don't have anybody in your group, just exit, come back to the main room, and we'll find another group to put you into, okay? So here we go. We're just going to put everybody in a group. Carol, anything else? Actually, you need to put the document in the chat box first before we go anywhere.
I'll do that first. Okay, do that right now.
So I'll just set everybody, if you can download the document from the chat box that Carol is just going to pop in there. And Carol, how long would you like to give people? 5 minutes, 10 minutes?
I think max 10 minutes. I don't seem to be able to attach anything.
Okay.
I'm not having much luck with the IT today, sorry. Let me see.
No, I think you're right, actually. I don't even think I can. Right. Can you, okay. I don't know if that's going to work then, if we can't have it like that. Shall we just put it up on the screen and just have a bit of a discussion and go through it?
Okay.
I think
Let's
that's going to be better. Sorry,
Yeah.
I think it's probably been disabled within the chat box then.
Okay.
Oops. Okay, sorry, Carol. Put
Yeah.
up the other bit on the screen and we can have a chat about it.
Yep, I just need to, I'll share it here.
While Carol's doing that, if anybody has any other questions, just let me know. You can pop it in the chat box and I can pull together those questions for Carol. One person, Carol, as well, has asked, how does the P&L we're discussing now compare to an individual product P&L?
So this previous one here. So if you have, is the question, I have one product, so how would this look different if I had just one product?
Yes. Yeah.
You just have one line in your income. So you have, instead of, let's say, landscaping services, your product name, and that would be all of your income. And then your cost of goods sold would be more straightforward as well, probably. So you just have the cost of that product to, so whether it's the cost to manufacture, the cost to purchase in, and then resell on, and then you still have your gross profit and then everything else. So I imagine with one product, your administration costs would probably be simplified as well. But the actual layout, exactly the same.
Okay. And another person has just asked, is there such a thing as variable costs that don't necessarily occur every month? If so, then where does it fall on a P&L sheet?
It would be most likely in, again, below the profit and loss. So variable cost might be if you have, well, it actually varies. So if you have like a freelancer, that could be a variable cost that you hire in as and when a service is needed. That would be a direct labor cost in this example, a direct cost of sale, because that freelancer is coming in to deliver the service that has been ordered. So you can directly tie it to a sale. If you have other variable costs, which might be, I mean, I guess some costs go up and down. So sometimes maybe your phone calls are higher, sometimes they're less if you're not on a set package. That would always be in administration costs. I'm trying to remember what other variable costs, think of what other variable costs you might have. That would be an operational cost. I mean, marketing costs can go up and down. I'm not sure what else then you would have, but unless, I guess the decision point is, do I only have this cost because I made the sale? And if it do, then it goes into your cost of goods sold. If I had this cost, regardless of whether I made a sale, or I have this cost because I want to make a sale, then it goes below. It's an administration or operational cost. Goes below gross profit line.
Okay.
Yeah.
And what about capital investment? Does that go on the P&L or where would it go?
Capital investment is in equity, which goes on your balance sheet. So
and we are going to do a whole session. I'm saying we're just going to do a whole session on balance sheets as well, because I think that's a whole other area we need to delve into. We'll do that in the new year. Okay, do you want to?
Yeah, want to share?
Let's go through this. And again, you can chat any or put any other questions you have in the chat, and we'll get to it just after Carol has taken us through the balance sheet as well. Or sorry, the P&L sheet.
P&L. So to say, I often have technical issues with sharing. So can we see a balance sheet a little bit?
No.
Or the P&L? No.
No. If not, what we might need to do is just give that a miss and.
Yeah. Okay, it should be up now.
No. Oh, there we go. Yeah, perfect.
Okay. All right. So this was the exercise we'd hoped to share, but and the instructions are here. It says it's going slow now. I hope you can hear me okay. So in this example, Yasmin is a clothes designer. She opened her first store in February 2019. She now owns 2 stores and she sells both her own designs and other designers' clothing. She also has an online store. So on the online store, she exclusively sells her own designs. And this is important information because she's got multiple sources of stock and she's got multiple sales portals and different stores. So she's preparing her 2020 financial statements and needs your help. So we were asked to basically input these into the income statement. So I will just do that really quickly. It was quite straightforward. In this case, cost of stock sold is the only cost of sales for this business. The rest were all, I'm going to delete this. The rest were all administration costs. Because if you look at it, it's advertising, branding, fixed asset depreciation, which would be when she kitted out her store, she would have paid to have all of the furniture that needs to go into that, and that needs to be depreciated, general expenses. These are all, I mean, please free to ask questions if you're not sure. These are all general costs, not directly related to a sale that she made. So if we input them all in here, it tells us that in 2019, pre-COVID, she made just over 1 million dirhams in her business. That reduced to 956,000, which is a 5%.
We can't see, like.
You can't see?
It's frozen.
Oh, this is, I'm not sure how I unfreeze.
Yeah, I think what's happening, Carol, is it's not the updates that you're doing aren't showing on the screen.
They're not showing.
No.
Okay. Do you know what? Maybe we'll just skip ahead, which is unfortunate, but what I can do.
Try sharing again and see if that will work.
Okay. So is this working now? This is the PowerPoint. It's working.
Yeah, we see the PowerPoint. Yeah.
Okay, I'll try the Excel one more time, and then I'll admit defeat. Okay. Can you see it now?
Yes.
Okay, good. For some reason the numbers.
Yeah, that's working.
Okay, perfect. So essentially what I've done is I've updated the income statement for this business. It's a clothing store, retail. And the pieces of information that I would pull out from this, so this was the exercise, what pieces of information does this income statement tell her that she can maybe consider to make changes in her business? So, and bearing in mind that this is 2020, had a COVID impact, and her business is clothing, both in retail, having its stores, and also online. The first thing I would
Carol,
see is that, yeah.
sorry, Carol, if I can just interrupt you, I'm getting a lot of direct messages, people saying that because they didn't see you input the numbers, they're asking just if you could maybe take a couple steps back, just because they feel that there's a few gaps that they've missed there.
Okay.
So if you wouldn't mind, and sorry for the people who are okay with it, but maybe if you could just maybe quickly show everybody and talk through it, and then we can go to that, if that's okay.
Yeah, absolutely. So the template already had the income input. So she's got her main sources of sales are her store sales, her online sales, and then other. Another could be she's doing some consultancy, maybe as a business owner, she does talks. So they would be more general ad hoc. Then this was essentially the list. We had stock sold and all of these costs, which are very common costs for this kind of business. And when I looked at these, for me, I could see that the only direct cost of her sales listed was the cost of stock sold. So that meant her cost of sales only had this number. Everything else went to operational expenses. So advertising, branding costs, fixed asset depreciation, which I mentioned, was where she would have had to basically kit out her stores, put in all the shelving, all of the furniture. That would have been a huge cost for her in the first year that needs to be depreciated. That's a general cost. Insurance, licensing, marketing, rent, salaries. Now, salaries would be the administration costs, even the sales staff, unless she can track to each sale, then that would be general. So as you can see here, actually, the amount or the different categories of operational expenses hugely outweighs our cost of sales. And that goes back to the point of we need to really think past just gross profit and make sure that we are fully aware of everything that goes into operational costs, because they tend to add up very, very quickly, and especially if you've got like a brick and mortar business that has fixed assets, that has a large footprint, presence, whatever you want to call that. So then once we've categorized all of these, then the next part of the exercise was going to be, okay, well, what is this income statement now telling us? If you were the accountant or the advisor to Yasmin, what would you say to her about her numbers and her business? The first thing I would look at here is the fact that actually her online sales went up last year while her store sales went down. Why was that? It was 2020, it was COVID, her shop was probably closed for a period of time. And if it wasn't, people weren't going out and buying, but we know that online sales went up massively. So what does that tell her? Maybe she needs to focus more on her online presence than her in-person presence on her actual retail. So that's something, number one, that she needs to look at, especially now at the minute, 2021, and COVID is still ongoing. And also within that, we know that online sales is all her own brand. she doesn't sell other brands on it. So it's interesting to know that her own brand is very, very successful. And depending on where she wants to take her business, maybe she can focus on just that by developing her own brand and all the advantages that that brings. And that's something very interesting for her to look into based on these numbers. But even still, we can see her income has come down year on year. So we bear that in mind. Then we look at the cost of stock sold. So because her volume of sales have gone down, then so has her cost of sales. So actually, her total income has gone down 5%, but her cost of sales have gone down 8%. So it's interesting to look at the division between what she sold and what it's costing her to buy it. Looking at this at first view, without digging into the detail, I would say it's probably working out cheaper for her to create her own clothing line than it is to buy others and mark it up to resell. So again, that's another potential piece of information that says maybe she needs to really focus on her own clothing line because it's selling well, it's costing her less to produce, and therefore there's probably more potential for a gross margin percentage increase, that she will earn more profit per piece if she looked at really focusing on her own clothing line rather than combining it with external brands. So the gross profit line tells us that she has made less profit than last year, but it's only 3%, even though her total income has reduced 5%, her profit reduced just 3% based on the cost of that stock. Then we look at everything else, operational expenses. What was she able to control given the circumstances from 2019 to 2020? Her advertising went up because more than likely she probably thought, you know what, I really need to push my online store because now that's where people are most likely to purchase. My sales are down, so I want to invest in advertising. Her branding costs went down to zero because she set up in 2019. Her branding costs were from that year alone. She didn't have any this year. Fixed assets depreciation would have gone up because she wouldn't have had all of that cost for 2019. Realizing it wouldn't be for 12 months, but it'll be a full 12 months for 2020. So we would go through each line by line like this. And then the other one that we consider is, we would feed back to her is, how did she reduce her rent? So maybe she was quick off the mark and went to her landlord of her property where her stores were and said, given the COVID situation, can we negotiate? And by just reducing it 10%, it's 15,000 dirhams, say in this case, that's a huge impact on her bottom line. So if she hadn't done that, for example, to do that right, her, the difference it would have made in her total expenses, that would have gone up to 220 as opposed to 205. Salaries, did she reduce maybe part-time workers? So you can see basically that she did her best and definitely was quite active in trying to reduce costs based on the lower sales. But then things like telephone went up. So maybe she had more customers online that needed to be called for deliveries or whatnot. So you can really analyze where her costs went up, where her costs went down based on the nature of her sales for that month. Website cost most likely went down because she would have set it up the main creation costs, development costs last year, but she still spent quite a bit on it this year because most likely she could see that her online sales were increasing, therefore she needed to invest and spend a bit more money than maybe she might have planned in the second year to keep that website interesting for that new or growing income stream. So because she managed to reduce quite a lot of her costs, even though if you look at it, her income reduced 5%, year on year, her net profit actually increased 1%. It's pretty much flat. And that is really, the summary of that would be, she pursued where the new sales were coming in. So she was aware of her income streams, which of her services or products were selling, and she invested in more advertising and marketing maybe for those areas. She reduced costs wherever she could, even though they're perceived fixed costs. She went to her landlord and said, I need a reduction. Can we negotiate given the unusual circumstances? And because she took all those actions and she had the information that she was analysing on a regular basis, she was able to actually produce a tiny bit more profit. And then when we look at our gross profit percentage, she managed to keep it more or less the same, went up a tiny bit, and actually her net profit percentage went up. So her business has been more profitable because she took action based on the information included in her income statement. Well, I realize there's probably quite a lot in there. So yeah, open to any questions on that, if there was any.
There hasn't really been many in the chat box. Does anybody have any questions that you want to know? So Jessica has asked if they can receive the Excel with the formulas. I think that's maybe if you want to share it with me, Carol, I could give it with Hiba, and when she shares the email with people, she could attach the Excel as well.
Yeah, that's fine with me.
Okay, no problem. Who else has questions? Okay, so question here, explain the gross profit percentage and net profit percentage at the bottom of the sheet.
Okay, so your gross profit percentage is your total gross profit. So in this case, the screen is up. I'm a bit afraid to swap back in case it doesn't work. So your gross profit percentage would be 166,000 divided by your total income. And what you want is basically that to be as high as you can possibly get, because what it's telling you is how much the percentage profit you've made on your cost. So if you buy something for 100 and then you sell it on for 50, your gross profit is 50, therefore your margin, your gross profit margin is 50%. That makes sense. And what you want is that profit to be as high as possible. And the reason we look at it in percentages is because the numbers, we can get lost in the actual dollar or dirham number, whereas a percentage will tell you basically the higher that percentage, regardless of whether you're selling 10,000 dirhams a month or 1,000,000 dirhams a month, the percentage is what will really tell you if your business is driving forward. Because if you make, you know, on a 10,000 dirham revenue a month and you make 2,000, then that is a 20% profit. Whereas if you look at, it's only 2,000 dirhams, but if you make 40% and it's significantly more, I might explain that very well, sorry. I'll just leave it alone, actually, I don't want to overcomplicate it. Basically, the percentage is actually really, really important because you want to get that percentage higher, because it takes out the conversation of whether it's 2,000 dirhams or 100,000 dirhams. For your business, what's most relevant is the percentage. And then it's the same for the net profit. It's your net profit, total net profit divided by your income again. It's always divided by your income. So that's telling you when everything is paid for, how much profit your income is providing for you. So your sales, how much profit it's generating. And again, the higher that percentage number, the more profitable and sustainable your business is.
Super. Now, question for you. They want to know, we could have a cost recorded as an operating cost for a period, and once the product has been invoiced or sold, it moves to a cost of goods sold for the next period. Is that correct?
No, it won't, because once it hits your P&L count, so I'm trying to think of an example. The only example would be if you're thinking that your cost to purchase your stock, but it's not yet sold. The cost to purchase that stock actually sits on the balance sheet as an asset, and you don't see it on your income statement until it's sold, and it goes directly to cost of sales. I can't think of any administration costs that would move. The only thing you could potentially have is maybe you have an employee and they are working in general sales. So their cost will be an administration or operational cost, but then you move them into direct sales for a direct product, and then you can see how their cost is directly related to a specific sale, then you could argue that from that point onwards, their cost moved into a cost of sale. But that's a change in circumstance of the employee, like their role is different. I can't think of any cost that you certainly wouldn't change it historically. So if it was an operational cost at the point in time that you're recording it in your bookkeeping, it stays there from the past. Only if the circumstances change, and from that point forward, you could move it. You don't adjust backwards.
Now, this is one that's quite important for people who have service-based businesses. Been asked by a few people wanting to know how they can calculate the cost of time and work out those formulas for their service business.
Yes, we're getting quite technical.
That's why you're here, Carol.
Yes, so I need another spreadsheet. So really so if you have an employee and you're paying them, let's say 2,000 dirhams a day, the amount of time that they spend on a service. So let's say you have a client and you have contracted your employee out to that client to deliver a service for 5 days of 1 month. The cost of, the way you calculate how much of that is a cost of sale, or is the 5 days that you can clearly show that that individual is working on that service for your client. So 2,000 a day you're paying them, they're working on that service for 5 days, then your cost of sale for that individual for that service is 10,000 dirhams. That goes into your cost of stock, or cost of service. If that individual is an employee for you, and then they spend the other 3 weeks of the month in the office, there's no clients, then those 3 weeks of their cost is actually an operational cost. So how you calculate it, most businesses in this case do timesheets, for example. So they will record, or the employee has to record how they spend their time, and then their cost is allocated based on that. So for example, I mean, I'm an ex-auditor. As an auditor within that business, every single day I would log where I spent my time and on which client. So if I worked on 5 clients a day, I would say I spent 1 hour on this client, 2 hours on this client, and break it down. And then the accounting system would calculate my costs, charge them to those clients. So that's my cost of sale, or the cost of sale for the business for me to deliver the service to that client, which goes into the income. So that's why it's getting quite technical. But essentially, the essence is the amount of time spent by that individual on the service and how much you pay them for their time to do that is your cost of sale. When they are not directly working for a client or on a service, then it's an operational cost. Does that make sense?
Yes, and we will also be doing a session on pricing and how to price your goods or your services as well later on as part of the UN Women sessions as well. We're not having lots of questions. I don't know if people have questions or if it's something that they understand. If you have anything else that you want to know, maybe just pop your question into the chat box. While we're going along, actually, one of the things I am going to do is, before people jump off, I want to launch our last range of polls, actually, just because we do want to know and hear from you as well about, oh, actually, Carol, I think you have one more poll as well,
Yeah.
Right? Yes. I'm going to launch this first, and then I have a UN Women poll as well for them.
So based on everything we've discussed, how often do you think you should review your profit and loss statements? So never, once per year, semi-annually, quarterly, monthly, or whenever my accountant sends it to me.
Lots of people have been asking about the recording link. Just to let you know that the recording will be available, and it will be on the UN Women Arabic YouTube channel. So you'll be able to access that within a couple of days. We try to get it up as soon as possible after the session. So please feel free just to check out the UN Women Arabic YouTube channel, and you'll be able to find that and all of the other previous sessions that we've run as well. Okay, I'll just give it to 1 minute while people are filling that in. And there we go. And Carol, tell them how often they're supposed to be reviewing their P&Ls.
At least monthly, especially at the beginning of your business. The more often monthly, the better, because that's how you keep on track of how your business is doing. And you also really get to know your business. So monthly. I like this. One person said never. It's not bad. Never.
Yeah. But
Yeah.
do you know, Carol, you and I were speaking about this before the session started as well, that even if, because I think sometimes as women, and I'll hold my hand up that I used to be like this as well, that I was terrible at maths in school. I hated maths. I'm a creative person, really didn't feel comfortable with numbers. And so I relied on other people to do the books, to do the numbers. And I didn't really have my head in the books. I had kind of monthly or quarterly reviews to see how the business was doing, but I didn't look in detail on things like that until what happened is I had some people take some money out of my business that shouldn't have been taken out. And then I realized at that point that I needed to always have my eye in my business. And I think that's really important for all of us as business owners. And I think, Carol, you probably heard of lots of examples as well, that even, and I hear from women as well who will say, oh, you know, I've got like my friend doing it, or my husband or my brother. We still need to have our eyes in the book, whether it's a family or a friend member or a colleague or your accountant doing it. You still need to be having your eyes in the books all the time.
Yeah, I 100% agree. And there are a lot of, like you mentioned, horror stories out there, because we trust someone and it turns out that, and sometimes it's just they make decisions that we don't necessarily agree with. They may have made it in good faith, but because we weren't involved, you know, and at the end of the day, no one will feel as strongly or motivated about your business than you will. And the power that's in these numbers, I think, you know, I talk a lot about when it comes to money, we're giving our power away. And by not getting involved, and someone else can do it, absolutely hire an accountant, but build a relationship with the accountant, because the power in those numbers, if you're not using it, it's wasted. And yeah, we can tell so many stories about how businesses, really, really great businesses actually failed because the business owner was not actively involved in the financials, reviewing them, understanding them. And it's a preventable issue. But, and like you mentioned, you don't have to be good with numbers. You don't have to be good with accounting. You don't have to understand accounting. Just spend the time to get to know the lingo. And then that, I find that really takes away that initial veil of, it's like another language, I don't understand it. And very quickly for your business, because you know your business. No one knows your business better than you do. So when you start linking your business to what the numbers are telling you, very quickly, you will really be able to read them very easily, quickly. And I've had many women say to me, they actually look forward to it. Like they sit down on a Friday night and they do it because they enjoy it now that we've removed that overwhelming fear.
Yeah, and it is something you shouldn't be scared about, because it is, when you understand it and you're able to see how it can help you better run your business, it's fabulous, because it gives you more control over the future of your business. And then you start thinking about, oh, you know, what about my pricing? What about, you know, my costs? Maybe, you know, I can negotiate with my suppliers, or maybe I can look somewhere else, or what things can I do to improve my profit margins, to improve the profitability of my business as well?
Yeah, exactly.
I like this question. We're going to, one person asked, it's mentioned that women business owners look less at the numbers versus men. How can we move the needle on this?
Well, this is exactly why I set up my business, to help move the needle on this. I think workshops like this, talking about it more, and just talking about it, finding someone who can help you kind of decipher initially. And yeah, I mean, the work that you guys are doing here is really helping with that.
Absolutely. And I think, do make use of all of the sessions that UN Women and NAMA Women Advancement are making available, because it's amazing, all of these sessions which are available free of charge, that most likely you would have to be paid for. And we're really grateful for all of the experts who are lending their knowledge and expertise for these sessions. And we are going to be doing a lot more in the finance area, because we really recognize that this is an area, and we hear this from women business owners, that this is an area that people struggle with. So absolutely, we're here to support you and to provide the information and the knowledge, and knowledge is power.
Yeah.
If I can please ask, I know a lot of you have filled in, we've got 76% that have filled in the poll, but please could you just let us know what you thought about today's session and how you feel that your knowledge is, because it's very important for us when you have a program that's as large as the UN Women program, that we do need to really measure the impact that it's making and how it's helping you in your business. So you'll be helping us a lot and enabling us to offer more sessions like this for you if you give us your feedback, please. So that's my little plea, because we only have 75% of people who have filled it in. Please, if you could. Thank you very much. Carol, if people want to reach out to you, how can they get in touch with you?
Okay.
Oh, hang on, you've still got a few more slides to go. Sorry.
We just had one. It's more of a summary slide, so I'll quickly go through this. So essentially, to summarize, what is the purpose of the P&L and why it's worth putting the effort in? Because it shows you how much profit or loss your business has made during a certain period of time. It shows you where you can reduce or where maybe you should increase your expenditure. It provides your valuable insight into the trends in your sales cycles. It's key data to analyze your business, both for yourself and for investors. You will know where your money is coming from and where it's going. So that's back to the services piece and the products. Which one is actually bringing in the most money, and which one are you spending most on? It highlights changes in your business over time, because our businesses evolve. So the longer we're in business, we need to really monitor what changes, what patterns are coming up. Is the impact of sales generating costs versus non-sales generating costs. So what is your gross profit percentage? How much profit is that generating for you? And then how much is your operating costs eating into your sales profits? And like I said, it's a key statement for potential investors. So to answer your question, Jen, this is how people can contact me. So you can use your mobile phone to scan these with your camera. It'll bring you to my Instagram. If you want to sign up for my newsletter, and I also offer a 20-minute chat with anyone who's interested to talk to me, find out more about what it is I do, how I can help them, even give some quick tips on some issues that they are facing in their business or personal finance. You can book in for a 20-minute call or email me on carol@consciousfinancecoaching.com.
Excellent. Thank you so much. Carol, that was really, really insightful. And you're getting lots of love from everybody in the chat box as well, saying it was really useful. Thank you so much. Also thanking UN Women and NAMA Women Advancement, which is great. Before everybody signs off, I just want to show you what we have coming up. If we can just move to that next slide, please, Carol, because we do have in December, we can go past the polls since we've covered those. Look at what we have coming up. We have Master Your Elevator Pitch with Kelly Lundberg on the 9th of December, and Managing Stress as a Business Owner with Nancy Zavana on the 22nd of December. So you will be getting emails from the UN Women team about that, but we do have a couple of really interesting and valuable sessions, and we wanted to give you a slightly lighter session just before everybody breaks for the holidays on the 22nd of December on helping you manage stress as a business owner, because I do realize in speaking with a lot of business owners that people are maybe feeling a little bit stressed towards the end of the year. So we want to just help you calm down before you go into the holidays and kick everything off in the right way on 2022. So with that, I would like to thank Carol so much for today. It was so useful, and it's nice that we can really go into detail on this and have a better understanding of our numbers within our business, because that's essential. And I would like to thank UN Women and NAMA for making this possible. It really is phenomenal, the range of content that they're providing at no cost for women business owners. Please don't forget that there is a Women-Owned Business Directory if you would like to take part. Maybe Maya can pop it in the chat box one last time if you would like to see it. And all I'm left with saying is thank you so much for taking part today. Remember, when we come together, beautiful things happen, and we are so much stronger together. So I wish you a wonderful afternoon, and we will see you on our next session on the 9th of December. Take care, everybody.
Thank you.
And we have a couple of questions about how to get notifications about the coming sessions. You should register for the UN Women mailing list. And if you're not on the UN Women mailing list, let me pop the email address on the chat box as well, so you can have that. So if anybody's not on the UN Women mailing list, give me 1 second and I'll pop that in the chat box, and you can send an email and they will put you on the mailing list, and you'll get information about all of these sessions coming up and all of the different activities. And also you'll be notified, and there we go. And Maya's put the link for the Women-Owned Business Directory. So hang on to that. If you are a majority women-owned business and you're not in the directory, make sure that you list your business so you'll be able to have access to other market opportunities as well from organizations in the UAE. So on that, thank you so much, ladies, and have a wonderful afternoon. Bye.